Okay, this is week 5, lecture 1. Okay, you are still in topic 2. So last week I have started this topic 2, and this topic 2 is about the process, the accounting process. This is about this topic will explain about the way to do accounting record for a business. So let's say you have a business in the future and you want to make accounting record for your business. So how? So in this topic, I have told you last week to do accounting record for a business. Then you have to follow the accounting cycle. Accounting cycle shows the steps that you have to do when you want to make accounting record for a business. So I just want to refresh your memory again. There are 8 steps in the accounting cycle. The first step is doing analysis. You have seen last week I have explained how is the analysis done. How you can do the analysis, and then after you have done the analysis, you have to record the business transaction in the journal. Journal is the first book that we use in accounting, and in this course we focus on general journal only. I hope you still remember last week I have explained these 3 simple journal entries. So that is the second step. The third step is, so at the end of an accounting period, so maybe at the end of the year, if you want to calculate profit for 1 year, you have to stop recording the transaction in the journal and you do step 3. The step 3 is you transfer all the journal entries in the ledger. Okay, this in this lecture I will explain the step 3. So this is the thing that I have explained last week in the previous lecture. I have explained about how to record business transaction in the journal. So today you will see the step 3 in the accounting cycle, which is posting all the journal entries into the ledger. So in this step, okay, let's see, there are several terms that you have to know related to step 3. First, posting. Like I said earlier, step 3 is posting journal entries into the ledgers. So posting means transferring amounts and data from journal to the ledger. Okay, ledger. Okay, what is a ledger? See the second term in this slide, ledger. Ledger is the second book that we use in accounting. Remember, journal is the first book and ledger is the second book. Ledger is a book of accounts where journal transactions are posted and thereby summarized. So ledger is a book. In the ledger there are many accounts. Account for cash, account for receivable, account for supplies, account for land, building, bank loan, capital, withdrawal, etc. So remember, ledger is a book. In the ledger, in the book, there are many accounts. And then posting reference. Posting reference is a cross-reference number between the general journal and the account in the general ledger. Chart of accounts. A chart of account is a systematic listing of all accounts used by a company. So chart of accounts is like this. Ledger is a book. In the ledger, there are many accounts. So chart of accounts is like in the first page of the ledger. Chart of accounts is like shows a list of all accounts that appear in the ledger. So it is like showing the content of the ledger book. So this is an example of chart of accounts. Chart of accounts shows all accounts that appear in the ledger. And also you can see there, for example here, 101 account cash, 105 account receivable, 107 inventory. So this the chart of accounts shows the all accounts that are in the ledger, and also maybe the page number. It is like the page number, page 101, page 105 account receivable, page 107 account inventory. Okay, that is the chart of account. Okay, like I said earlier, in the ledger there are many accounts. The accounts that I mentioned is called T accounts. So why we call it T account? So because see the picture here, the figure here, it looks like a letter T. So for T account, you have to draw the T lines there, and then you have to put a name for the account. For example, account cash, or account bank loan, or account capital, or account revenue, or anything. And then remember, the left side of the account is debit side, and the right side of the account is credit side. Debit means debit means left, credit means right. Right side and left side. Okay, after you have posted all the journal entries into the ledger, you have to calculate the balance for every account. So you have to transfer all the journal entries into the accounts, and then after that you have to calculate the balance for every account. I will show you how to do this in another video. Okay, so and then this is the step 3 in the accounting cycle. After you have calculated all the balances of each account, then you have to do step 4 in the accounting cycle. In the step 4, you have to prepare a trial balance. Okay, what is a trial balance? A trial balance is a list of all accounts with their balances. So this is the format of, okay, what is trial balance for? Okay, that is not. I will show you the trial balance. Okay, this is the format of a trial balance. So see here, in the first column you have to list all accounts. The name of this account are coming from the journal, sorry, the ledger. And then you have to show the balances of these accounts. In the third column, the second column is for the debit balances. For example, cash has $21 debit balance, account receivable has $15 debit balance, inventory has $12 debit balance, etc. And then column number 3 is to show the credit balances.
So here you can see account payable has $30 credit balance, capital has 150 credit balance, sales revenue has $919 credit balance. So this is the format of the trial balance. I also has a video explain about trial balance and how to prepare the trial balance. So another thing is okay, what is the reason of for preparing a trial balance? The main reason or the main purpose of a trial balance is to know whether the recording process that you have done in step 1 and 2 and 3 are correct or not. So most of the time, if you prepare a trial balance and then you see that the total in the debit side equal to the total in the credit side, then most of the time it shows that the recording process that you have done from step 1 to step 3 are correct. If you prepare a trial balance and then you see that the total in the debit side does not equal to the total in the credit side, then you know there is something wrong in the recording process that you have done in topic 1 or topic 2 or topic 3. So remember that is the purpose of preparing a trial balance. Okay, this is a sample question. From this question, okay, you can see here in this question there are 1 2 3 4 5 6 7 8 9 and 10 business transaction. For example, 1st of January, you start a car wash business. You invested $5,000 cash and 3,500 equipment into the business. So that is one transaction. 2nd of January, another transaction. 3rd of January, another transaction. So this is a simple situation. It is like you start a business and then 10 transactions happen in the month of January 2000 something. So and then you want to do accounting record. Okay, so and you know that if you want to do accounting record for your business, you have to follow the accounting cycle. So so this is the question. You are required to analyze the business transaction. This is step 1 of the accounting cycle. And then B, record the transaction in journal. That is the second step in the accounting cycle. Steps numbers C, post journal entries to ledger. That is the third step in the accounting cycle. D, prepare a trial balance. That is step 4 in the accounting cycle. So I have several videos explain about how to do this simple question, how to do step 1, step 2, step 3 and step 4 of the accounting cycle. I will give you the link. You have to watch the video and you have to see, okay, this is the way to do the analysis, and then after that, after doing the analysis, you have to record in the journal. After that, you have to post all the journal entries into the ledger, and after that you have to prepare a trial balance. Okay, I will give you the link after this. Okay, this is the end of topic 3, but you have to know several things before we stop or before we finish with this, before we done with this topic. Okay, so the thing that you have to know. Okay, the thing that you have to know is in this course you will learn, or you are learning, how to do accounting record manually. You have to think and then you have to record in 2 books, journal and ledger, and then after that you have to prepare trial balance manually. So but now you have to know that accounting process can be done using software and computer. So these are several advantages of using computer when you do accounting record. So first, large amount of information can be quickly processed without mathematical errors. So that is the advantage of computer. You can enter many data and computer can process the data very quickly without mathematical error, compared to if you do it manually. If you do it manually, it takes time, and then you have to calculate manually using your calculator or something, so it is a slow process, but computer is very fast. And then second point, that if you use computer to do accounting record, more documents can be produced than humanly possible in the same amount of time. If you use computer, every time you record, you can prepare a document. Maybe you sell something, you enter the data in the software can print the receipt for the sales, or invoice for the sales, or anything. Very fast, can be produced very fast. Common tasks can be automated for increased efficiency. If you use computer, common tasks like sales can be done automatically. It's like you go to a big supermarket, the sales is recorded when the cashier scan your item. You purchase rice or sugar, and then the cashier scan your item, the rice and sugar. Automatically, the sales amount and item are recorded in the accounting system of the business. That's how using computers makes things can be done very quickly and efficiently. So that are the advantages of using computers and software. But there are several disadvantages of using computers and softwares. First, computer hardware and software require human judgment and input. Okay, still, even though you use computer, still the person who do the recordings need to think and to do judgment, to do judgment, to think whether it is correct or not to record something. Okay, and then garbage in, garbage out. So computer is good. It can do many things quickly. It can process data very quickly. But this this thing applies: garbage in, garbage out. If the person who handled the computer put wrong data, then the computer will produce wrong report or output. Okay, so garbage in, garbage out. If you use computer, you have to input correct data. Okay, otherwise you will get garbage out. And then once an error is identified, fixing the problem may require many adjustments. So if you use computer, if you do error, for example, you put wrong number or wrong price for your product, you enter wrong price, so very difficult to identify the error. But let's say you use manual way of recording, you record in books. If something error have been done, then you can check easily. You can open the book and check. It can be seen clearly. But if you enter the data in computer or software and something error happen, very difficult for you to check. Okay, these are the things that you have to know in topic 2. I will share with you I think 4 videos related to the sample question there, and you have to watch that video, and you have to write your name and matric number in the comment section of that video, so that I will take it as your lecture attendance. And also in this video, you have to write your name and matric number in the comment section. also for the attendance for the lecture today. Thank you very much. That's all for this topic.